Hello and welcome. Today let's talk about TDS on purchase of goods. That is, as a buyer, you are required to deduct and pay TDS on goods that you buy. In this video, we are going to take a deep dive and understand certain key things about TDS on purchase of goods. But before we begin, for those who are not familiar, let's understand what's TDS. TDS is acronym for tax deducted at source. Here, a person who makes payment to another person is required to deduct TDS and pay it to the government. Now, the person who makes the payment is called the deductor and the other person is the deductee. For a better understanding, let's consider a scenario. Let's say here is a person called the seller who supplies goods to another person called the buyer. Against this purchase, the buyer is required to make payment to the seller. So here, buyer is the deductor and seller is the deductee. Out of the money that the buyer is required to pay to the seller, the buyer deducts TDS and pays balance to the seller. The TDS so deducted has to be paid by the buyer to the government, which in turn would be credited to the seller. This is TDS in simple words. With this basic understanding, let's now talk about TDS on purchase of goods. First, we are going to understand who are buyers and sellers because not all buyers are required to deduct TDS. Similarly, not all transactions are covered under these provisions. Then we are going to talk about the tax deduction part, that is, what is the rate of TDS, when do you have to deduct and pay this TDS, and as a buyer, what if you either don't deduct or don't pay. After that, we are also going to understand some of the situations in which these provisions are not applicable. That is, there are some exceptions. If you fall in this exception category, then these provisions are not applicable. First, buyers. Buyers can be any person, say an individual, firm, association, company, etc. And these persons can be either residents or non-residents. But for non-residents, the transaction should have been connected with their permanent establishment in India. To put it differently, for non-residents, if the transaction is not connected with their permanent establishment in India, then this provision is not applicable. Plus, total sales, gross receipts or turnover, any one among this, if this is more than 10 crore during the last financial year. To put it differently, if the turnover is up to 10 crore, then this provision is not applicable. Next, sellers. Again, sellers can be any person, say an individual, company, firm, association, etc. But these persons have to be residents. In other words, if the seller is a non-resident, then this provision is not applicable. Let us now talk about the tax deduction part. For this, let's consider a scenario. Let's say here is a seller supplying goods to another person called the buyer. Let's say the turnover of the buyer for the last financial year is 11 crore. Now, if the value of the goods purchased is more than 50 lakh, then the buyer is required to deduct TDS at 0.1%. But if the seller has not provided the PAN, then this rate of TDS is going to go up to 5%. And this 0.1% or 5% TDS is applicable on the value exceeding 50 lakh. So if the value of purchase is more than this threshold limit during the financial year, then the buyer is required to deduct TDS. And this threshold limit of 50 lakh is applicable per seller. Now, to have a better understanding of this, let's say you are the buyer and you have purchased goods from a seller and the value of the purchase is 80 lakh. So TDS would be applicable on value exceeding 50 lakh. That is 30 lakh here, and TDS at 0.1% would be 3000. If the seller does not provide PAN, then rate of TDS would be 5%. So as a buyer, you are required to deduct 1.5 lakh as the TDS. Let's now see when is this TDS required to be deducted, and once deducted, what is the time limit within which this has to be paid to the government. Continuing with the same example, the TDS of 3000 has to be deducted either at the time of purchase or at the time of payment, whichever is earlier. And once this is deducted, there are some time limits within which the payment has to be made, and this time limit is within 7 days from the end of the month in which the deduction is made. But if this transaction is related to the month of March, then TDS has to be paid by 30th April. Let's say you have purchased goods from a seller on 1st Jan 2023. So date of deduction would be 1st Jan 2023 and you are required to pay TDS by 7th Feb 2023. If this purchase is made on 1st March 2023, then date of deduction would be 1st March 2023, but you can pay this TDS by 30th April 2023. Alternatively, if you have just placed the order and made advance payment, but goods are not yet supplied, let's say you are paid advance on 31st December 2022. So date of deduction would be 31st December 2022 and you have to pay this TDS by 7th Jan 2023. Now what if you either don't deduct or don't pay? If you don't pay TDS within the time limits that have been specified, then you would be required to pay interest at 1.5% per month or part of the month. If you don't deduct, then 30% of such expense would be disallowed. Considering the same example, you have to deduct TDS on 30 lakh. If you don't deduct TDS on it, then 30% of 30 lakh would be 9 lakh and this 9 lakh would be considered as your income. If you pay income tax at the rate of 25%, then 2,34,000 is your additional income tax because of this disallowance. Let's now see in what situations are these provisions not applicable. This can be classified into 3 different categories. First, based on nature of the transaction, then nature of the buyer and nature of the seller. First, let's talk about the nature of transaction. If the transaction is related to securities or commodities which are traded through recognized exchanges, that is, you buy and sell shares on the stock market, TDS is not applicable on such transactions. Then transactions related to electricity, renewable energy certificate or energy saving certificate which are traded through recognized power exchanges, no TDS on such transactions. Then any transaction on which TDS or TCS is applicable under any other provisions of the Income Tax Act. For example, e-commerce operator is required to deduct TDS at 1% on gross value of sale of goods or services from an e-commerce participant. Now, the e-commerce participant is the person who supplies goods or services on an e-commerce platform. Now, on this same transaction, again the buyer is not required to deduct TDS in case of purchase of goods. Now, the next category, that is nature of the buyer. If the buyer is a government department not carrying any business or commercial activities, then such buyers are not required to deduct TDS. To put it differently, if these government departments carry on business or commercial activities, then TDS is applicable. Then nature of the seller. If the seller is a central or state government, not being a public sector unit, that is PSUs, so if it is a PSU, then TDS provisions would apply. Next, when the income of the seller is fully exempt, that is, when you buy goods from a person who is not required to pay any income tax, then this TDS provision is not applicable. Before we wrap up, let's understand what are the key things that you need to remember as a buyer or as a seller. Let's start with the buyer. This threshold limit of 10 crore of turnover, sales or gross receipts, this is considered for the last financial year. So if it is a new organization, then this TDS provision is not applicable for the first year. Then for subsequent years, if the current year turnover is more than 10 crore, then you need to deduct TDS in the subsequent year. So as a buyer, you need to check this threshold limit for every year, and if in any year it exceeds this threshold limit, then in the subsequent year you need to deduct TDS. Then non-resident sellers are not covered here. So if you import goods, then you don't have to deduct TDS. As a buyer, wherever required, ensure that you deduct and pay TDS to avoid interest as well as to avoid disallowance of expenses. Let's now see, if you are a seller, what are the things that you need to remember. Actually, it is the responsibility of the buyer to deduct TDS. So seller has got not much to do, except that if you are a seller, ensure that you provide your PAN to the buyer to avoid higher rate of TDS. Also ensure to check your AIS for TDS credit. That is, check your annual information statement to see if the tax that is deducted by the buyer is actually credited to your account. This is all I have for you today. Hope the video was informative. Thank you for watching.